All right, boys and girls, I'm going to break down for you the Apex rules from evals to the PA accounts so that you can get funded and, most importantly, never get denied a payout. So without further ado, let's dive in. I'm going to try to cover this as quickly as I possibly can. And it's obviously no secret at this point, I'm no longer exclusively partnered with TopStep. So I'm no longer unable to talk about other firms and the opportunities that they provide and my thoughts on them. So my thoughts on Apex. Obviously, some people have mixed feelings about Apex. Some people love them, some people hate them. But the reality is, as traders, especially when you're talking about prop firms, what we want to do is be able to go to where the most opportunity is, where the most upside is. And when it comes to Apex, no other firm has come close to the amount of money that they have paid out to their traders. I mean, they've paid out almost $500 million to their traders just since 2022. No other firm in the space is paying out more to traders than Apex is. That is just a fact. The reason for that is because they have the scalability that other firms do not have. With TopStep, you can only have 5 accounts. Tradeify, 5 accounts. Most firms, you can have basically 3 to 5 accounts. With Apex, you can have up to 20 accounts. So you're talking 4 times, in some cases more than 4 times, the amount of scalability when it comes to how much capital that you can trade with. So this allows you to take, truthfully, base hits with your trading and spread that out across 20 accounts. And that's how you're able to see these traders make the kind of profits and payouts that they are able to make. So really quick, let's go over the actual funding process first and foremost. You can choose from any of these accounts, 25K all the way up to 300K evaluation accounts. And the account that I'm going to be focusing on myself personally on streams is going to be these 50K full accounts. So just going over the rules here, obviously, first and foremost, profit goal 3,000 standard, but you have a trailing drawdown of 2,500. So for an example, comparing this to TopStep, you only have a $2,000 trailing drawdown with the 50K accounts. Here you get an extra $500 and the profit goal stays the same. There are a couple of subtle rules that make Apex accounts a little different than a firm like TopStep or these other firms that have an end of the day trailing drawdown rule, because this is an intraday trailing drawdown. And I'm going to go over that in just a second, but that is really one of the only main differences. Everything else is included. The NinjaTrader platform included, real-time data fees included. If you want to trade on Tradeovate or TradingView, you can do that as well. You guys can see the cost here is $167 a month. That is a little deceiving because most of the time Apex is running a sale where you can get these accounts for like 80 to 90% off. And right now they're doing just that. So if you use the coupon code Tyler at checkout, or even if you use somebody else's code, you're going to get 80% off your Apex evaluations. But if you were getting an account without using a coupon code or without there being a promotion going on, it would be $167 a month. And it would be 7 days minimum to pass, meaning that you would have to trade at least 7 days to hit your profit target. So you would just take it nice and slow, take those base hits, and then get there in that 7 days time. So then you can pass on time and get into that funded account. But again, with these promotions, not only do you get a sale, so for an example, the 80% off sale on the 50K accounts right now, you can get these accounts for like $33. I believe it's $33 and about 40 cents for these accounts. So what most people do is they stack up on multiple of these accounts because the goal for most people is to get to 20 funded accounts anyway. So they scoop up more than, just 1 or 2, and they are trading these accounts whether individually or you can copy trade them. I plan to be copy trading groups of these at a time until I get to 20 funded accounts. At that point, I'll be trading all 20 funded accounts at the exact same time. But the other cool part about the promotion is it's also 1 day pass. So you can pass the evaluation in 1 day. You don't have to trade for a minimum of 7 days. There is no consistency rule. You can pass in 1 day. You could pass in 1 trade. If you found an opportunity and a setup that allowed you to do that, you could do it. Then once you pass the evaluation, you hit your profit target. That is when you can activate your funded account, or the PA account is what they're called here at Apex. Once you pass your evaluation, then you can activate your PA or your funded account. And right now with the promotion, it's a $130 activation fee that pays for the lifetime of that funded account. If you don't want to do the lifetime option, you can do the cheaper option, which is a monthly fee, but over time you don't really save any money. If anything, you'll probably spend more money just keeping your funded account active, because it is $85 a month just to keep that funded account active. So most people just pay the one-time activation fee, and then you're in that funded account for the lifespan of that account. Now, before I get into the rules for the actual funded account, I want to go over the intraday trailing drawdown with you guys. So let's just use my poor drawing here as an example. So here's your equity curve, right? Your account obviously starts down here at the starting balance. So on your funded accounts, it is $0. And on your evaluation, it's on whatever the size of the account is that you started with, right? And the way that it works, so let's say you place a trade, and that trade starts going in profit, going in profit, going in profit, right? And obviously, let's say your profit goal is, that $3,000 mark for the 50K evaluation. So let's say you have a trade that runs up, I don't know, let's call it like $500 in profit. If you, let's say, put your stop loss at break even, and this trades against you and stops you out at break even, well, the intraday trailing drawdown is still going to register that your equity balance was up $500 at one point. So this will count against your trailing drawdown overall. So if this continues to happen 5 times in a row, you will blow the 2,500 max trailing drawdown, even if your account really never goes negative, or you end up hitting that max trailing drawdown amount. So this is the one caveat with these Apex accounts that forces you to trade them a little bit differently, not forever. This is really important because I'm going to get to this in a minute. Not forever, but during the evaluation phase and just the very early stages of your funded account, you have to worry about this trailing drawdown. So the way that you combat this trailing drawdown on an intraday perspective is by taking profit early and often. So you do not want to be going for these ginormous R2R trades, especially in the evaluation stage and in the early stages of your funded account, because you don't know when a pullback is going to happen. You could have a trade that's running perfectly in profit, and then all of a sudden you get this huge retracement, and you have no idea that trailing drawdown could be too much for your account to handle, and it wipes you out. So you want to be taking profit at your initial target levels, and at a bare minimum, be partialing, right? This is when partial profits really do come in handy, because even if you do get a retracement after your partial profit, it's not cutting into that equity dollar amount as much as it would have been if you left the full position on. So that is what we want to do. We want to play defense with our account balance and our equity curve while the intraday trailing drawdown is affecting your account, right? So it is affecting you during the evaluation phase, right? So this is something that you will have to deal with up until you hit the profit target of that evaluation that you purchased. So again, I recommend taking base hits, or just if you're willing to buy new accounts, if you do happen to blow them by pushing them more aggressively, that's fine. You just have to understand, the more aggressive that you are with your sizing and the more aggressive that you are with trying to get to your profit target in as little trades as possible, that also makes it more likely that if you are incorrect with your trade, that you could end up losing more accounts on your way to actually passing and getting funded. And the cool part about this, guys, is this does eventually stop. This eventually stops in your funded account, but I'm going to go over all of these rules here really quickly with you guys. So when you actually get into your funded account, there's not a whole lot of rules that you have to follow, but there are some important key ones that you have to keep in mind for your trading so you never get denied a payout. Obviously, that is the main goal with everybody here, is not ever getting denied a payout. So rule number 1, 8 trading days minimum between payouts. 8 trading days minimum, 5 of which have to be green of $50 or more. So compare that to Top Step. You need 5 green days of $200 or more. Here you only need 5 of 50, and the other 3 days could be red. They could be break even. It doesn't matter, right? So there you go, 5 green days of $50 over the span of 8 trading days from your last payout. And then reaching the safety net this is going to be what qualifies you for a payout in terms of a profit target, right? So all the safety net is your drawdown that you started with plus $100. So if you have a $2,500 drawdown on a 50K funded account, that means that you would need to get the account balance to 2,500 plus 100 to reach your safety net. So $2,600 would be your safety net. The cool part, guys, about that intraday trailing drawdown that I just went over with you guys, at that point, when you reach the safety net, right? So when you reach that safety net of $2,600 on your account, the trailing drawdown comes to a stop. So at this point, you no longer have to worry about the intraday trailing drawdown once you get to that $2,600, that safety net account balance on your account. And then from there, the other rules that you would have to keep in mind, couple main ones, 30% consistency rule, meaning you do not want to be going for these big windfall trades. 30% of your entire account balance cannot come from one trading day, right? So when you go to take your payout, you just want to make sure that less than 30% of your overall account balance didn't come from just one day. That is the whole purpose of taking base hits, being a consistent trader. The only reason that anybody would ever get mad about a consistency rule is if they just don't trade consistently, right? If they are always looking for kind of that windfall trade or to kind of almost get lucky or game the system in a way. If you're trading consistently with, consistent rules, consistent sizing, all of these things, you're never going to have to worry about breaching the consistency rule. Moving on, guys. Rule number 2, do not use worse than a negative 1 to 5 risk reward or a 5 to 1 RR. So let me just show you how ridiculous this actually would be if you were to do this. So I don't know anybody that has ever done this or would ever do this, if I'm being totally honest, but it would look like taking a trade like this, a negative 1 to 5 risk to reward, where you're risking 5 times the amount of your profit target. So if you are ever trading this way, 1, I would recommend seeking help, I guess. But 2, I mean, why would you ever trade like this? You can literally use a negative risk to reward if that's something that fits your trading style. But as long as you're above 5 to 1 R, right? You could be a 4 to 1 R if you wanted, I guess, and you would still be fine. So as long as you don't do this, then you shouldn't have to worry about this being an issue for any payouts being denied. The other component of this would be do not allow any open trades to eat up more than 30% of your overall account balance. So just to kind of make this simple, when you first get started in your 50K PA account, right, you have a 2,500 max drawdown. So 30% of that max drawdown would be $750, meaning that you could not let one singular open trade go against you $750, because that would be over 30% of your max drawdown. If you have this happen, it's not going to blow your account per se, but this will deny you an upcoming payout because you'll have to reset and go through an entire new cycle in order to reset that and then qualify for the next cycle for your payout. The other component to this is that you must close trades, whether it's on your evaluation or on your funded account, by 4:59 p.m. Eastern Standard Time or New York time. And it's not a big deal if you forget or you don't do it for whatever reason. The platform will automatically auto-liquidate your trades at 4:59 p.m. Eastern Standard Time anyway, but just something to keep in mind. You can't swing trade into the next day. You can't hold positions from one day to the next. If anything, you would have to let the trade get liquidated, and then when the market reopens in an hour, you can go ahead and hop back into a position if that's something that you are interested in doing, but they will auto close your positions at 4:59 p.m. So now really quickly, let's just go ahead and cover some of these extra things and give you some examples, guys, for the payouts. For those of you guys that are in the US, you guys can request a payout through ACH. That's pretty normal. For those of you guys that are not based in the United States, you guys will be using a platform called Plane for your payouts. We already went over these rules, 8 trading days, profit on 5 days, right, et cetera, et cetera. This is something that I really want to, again, remind you guys of. The safety net. So the drawdown plus $100 of your account. You need to hit this amount before you can, one, yes, get the trailing drawdown to stop, but then also before you can request a payout. You need to hit the safety net amount before you can request your first payout. When you hit that $2,600 amount on the 50K account, you can request a payout of $500. Okay, so you can request a payout of $500. So if you had 20 accounts, that would be a 10K payout. If you had 10 accounts, that would be 5K, so on and so forth. If you have a different sized account, obviously that will change slightly on what that safety net amount is, but pretty straightforward, guys. If your account balance is not to that 52,600 mark on that funded account, you are not going to be able to request a payout until you get to that point. So once you get there, you can request your first payout if that's something that you want to do. And then from there, guys, just to make sure you guys know the payout caps for the account sizes. So for the 50K accounts, you can take out a maximum of $2,000 per account for your first 5 payouts. After your 5th payout or your 6th payout and beyond, there's no more maximum payout amount. You can take out the entire balance if that is what you want to do. So let's just run some quick math on this, guys, because this is what I'm talking about when I'm talking about the opportunity that is here, unlike at other firms. So if you have 20 50K accounts or any size account, but let's just say 50K accounts just to keep going with the same example. If you take a payout of $2,000 across those 20 accounts, that's $40,000. You can do that every 8 trading days, as long as you've met, obviously, the other requirements. After you've done that 5 times, which would be $200,000 in payouts, then you have access to take out the rest of the account balances if that's what you want to do. Or obviously, it's up to you. You could just continue to scale and milk the prop firms, milk your funded accounts until essentially the firm stops you from continuing to trade with them. So again, guys, this is going to be my plan. Like I said, I just believe that the scalability factor is here, unlike it is at other firms, and it would just be silly to not, take advantage of it. At the end of the day, a lot of us are pretty good traders, and the only thing that we are lacking is capital. That's the only reason we're trading prop firms to begin with, is to, 1, have access to more capital, but 2, the exposure compared to the upside is astronomical, right? Versus funding a live account where you have to take 100% risk of whatever amount of money you put into that live account in order to place trades. With prop firms, you don't have that. You have far less skin in the game, but you have the exact same, if not more, upside potential than you even would trading live funds. And this is just the reality of it when it comes to being a day trader today in 2025 and beyond, is taking advantage of the opportunity of prop firms, which includes taking advantage of the one that allows you the most scalability. Hopefully this video was able to shed some light on some things, answer some of your guys' questions. If I missed anything, feel free to leave a comment down below. Or if you have a question about anything, comment down below. I'll try to answer all the questions that I can. If you're interested in getting some Apex accounts, maybe even following along with me on stream, feel free to subscribe to the YouTube channel here. Keep an eye out for the streams where I'm going to be going down the journey of trying to acquire 20 funded Apex accounts. We'll start with one milestone at a time. We'll say I'm going for $100,000 in payouts from Apex, and then we'll go from there. But it's all going to be done live on stream, and I'm not sure how long it's going to take, but it's sure going to be a fun challenge nonetheless. If you use code Tyler at checkout, it will give you an 80% off discount as of right now and a 1-day pass. And for any future promotions in the future, the code Tyler will always give you the best active promotion that is running at that time. I'm looking forward to seeing you guys on stream, trading with you guys on stream, and thank you guys for watching. I'll see you in the next one.